Pablo, good to see you. How you doing? Funky, good to see you as well. How you doing? T, good to see you as well, brother. How you doing? Funky, good evening, CMF. Let's go, Funky. Good to see you as well, T. Just gonna pin the live show. I hope everyone tunes in for this live show because tomorrow is Christmas Day and Christmas Eve and so on and so on, and therefore we won't be doing the live. So I hope everyone tunes in for today, essentially, and then Monday, Tuesday again, and then it's going to be New Year's. Obviously, we take a day off. Everyone should be spending time with family, in other words. What's up, Miles? What's up, CMF? Good to see you as well. Kerry, how you doing? Just pin the live show. My first one again today. Pablo was the first one. I don't know if you were the first one to retweet or like the live, but Pablo was definitely the first one in. Pin the profile. Here we go. Hi, Miles the CMF. Solomon, good to see you as well. How you doing? Hi, Miles the CMF. Stormy, good to see you as well. How you doing? I don't think we're gonna have a Santa rally. Well, it seems like Santa's rally is broken by the looks of it. Now, let's do the intro disclaimer, what we're going to talk about on tonight's live, and then we'll go straight into the first news. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. long time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also, we do Q&As in this live as well, which means if you do have any questions, put it down in the comment section. More than happy to help you out. Now, tonight's live, we're going to be talking about the bets that are being placed inside the crypto market space. Some people think the market is going to go one last time, essentially of a pullback situation, and some assume that we're not going to be having a pullback, and then instead we're going to be having some sort of a rocket launcher movement going into 2026 or in the first quarter of 2026. We're also going to be talking about essentially different jurisdictions on tonight's live show as well regarding the crypto space, some gold news to go through again on essentially on this live show, and then obviously Ripple news to go through as well. Just want to say thank you so much to everybody who has already liked and retweeted this live show. CMF members, thanks so much to everyone who's done that. If you haven't, smash the like buttons and the retweet buttons if you're watching this on X. And if you're watching this on YouTube, smash the like buttons as well if you already haven't. If you have, thank you so much. Now, before we go through the first news, which is regarding a massive crypto bet of where the market's going to be going, according to one massive whale, let's go inside the comment section first, and then we go straight into the first news. So, T says Pablo always the first one in. Yep, he definitely is. I'll be honest. Real anti-climax for this year. I think it's the Grinch rally this year, but it looks of it, yes. A lot of things that we hoped that would have planned out this year didn't plan out, but a lot of things did get worked out this year as well, which was the foundation that was built for the crypto space, especially the foundation, especially for Ripple, I would have to say. They closed a lot of deals, acquired a lot of licensings, and the biggest case in the crypto history, Ripple versus SEC, came to an end this year. Ripple got its XRP ETFs, reached over $1 billion, their RLUSD stablecoin in the top 5, as Brad said. So a lot of things did happen this year, a lot of things that should have happened didn't, mainly due to Democrats always being against the crypto space as much as they can because they don't like the idea of Trump's family, enriching themselves even further. Now, on tonight's live, we're going to be talking about, pray for me. Tonight we're going to be talking about a massive bet that's put on the crypto space, which is a crypto whale ramps up the $243 million leverage short across Bitcoin, Ethereum, and Solana. A unknown crypto whale has just put a massive bet against Bitcoin, Ethereum, Solana in dropping in pricing. So, a large crypto whale has sharply increased its bearish exposure, signaling expectations of a wider market essentially pullback. Recent on-chain activity shows that the trader essentially expanded leverage short positions across Bitcoin, Ethereum, and Solana. Essentially, the combined exposure now stands near $243 million, making it one of the largest coordinated short bets seen recently. Market participants also are closely watching the move as it reflects a conviction rather than short-term hedging. The whale strategy follows the earlier sale of 255 bitcoins, which funded additional short positions. Significantly, the trader increased leverages across all assets, amplifying both risk and potential returns. This timing comes as major cryptocurrencies struggle to regain upside momentum, despite essentially intermediate recoveries and attempts. The largest portion of the position targets Bitcoin. The whale essentially currently holds a short position of 1,899 Bitcoins, valued near $168 million short position just on Bitcoin. This exposure uses a 10x essentially leverage, suggesting confidence in near-term downside pressure. However, such leverage also leaves little margin for error if price rebounds. In other words, if essentially this whale, it does go, the market does go the opposite way, it doesn't go down, instead it climbs up, then this massive short position will be liquidated. Ethereum has also essentially has mirrored Bitcoin's choppy structure so far, with failed breakout attempts weighing in on the sentiment. Hence, the traders appear to essentially expect continued weakness rather than consolidation from Ethereum. Also, Solana is another short bet this unknown whale has put on. It represents the smallest but most aggressive position. The whale essentially shorted Solana, valuing over $19 million with a 20x leverage position. This leverage also essentially indicates a strong directional view, especially given Solana's recent volatility. Solana's recent price behavior adds context to the whale's essentially positioning. Sol trades at essentially $123.68, reflecting a daily decline of 0.97%. Moreover, the token has dropped 2.84% over the past week. Trading volume remains elevated, also suggesting active participation during the massive pullback. According to essentially some Solana essentially maxis, Solana's structure has not materially essentially changed. The asset continues to face repeated rejections near $127 essentially level. The price action now points towards a potential liquidity sweep below $120, and essentially the Solana maxis are not happy, but some are still putting short positions in. So, massive unknown whale comes out of nowhere, puts a $248 million essentially position, mostly on Bitcoin, then Ethereum, then Solana, to all dip down. Now, what's also being released on the side of that is El Salvador news. So here it is. The International Monetary Fund essentially says El Salvador is in talks to sell its state-run Chivo Bitcoin wallet. Now, the Chivo Bitcoin wallet by El Salvador's government was a Bitcoin wallet designed essentially for the retail section of El Salvador to be involved inside the Bitcoin ecosystem. The International Monetary Fund is not fond of the idea of anybody in El Salvador, retail member or not, owning any sort of part of Bitcoin. And they've been pressuring El Salvador for the longest time to sell their Bitcoin Chivo wallets. And it seems like maybe they've got to a stage where El Salvador's pressured to sell it. So, the International Monetary Fund's mission chief, essentially for El Salvador, issued a statement confirming that government's authorities were proceeding with essentially negotiations for the sale of the country's Chivo Bitcoin wallet. In a statement that came out, the International Monetary Fund said El Salvador's government was continuing to discuss its Bitcoin essentially project with the fund's official, and essentially negotiations for the sale of the government e-wallet Chivo are well advanced. The advancement signaled that the government may be preparing to sell some or all of its crypto holdings in the Chivo wallet. Now, just to be very, very clear, El Salvador has two crypto wallets. One is the Bitcoin government essentially wallet. One is the Chivo essentially Bitcoin wallet. They're not going to be selling every Bitcoin they have, but they are going to be selling maybe the ones inside the Chivo wallet. The statement followed essentially a May deal with El Salvador, in which the International Monetary Fund will pay $120 million as a part of the 2024 essentially loan agreement for $1.4 billion. As a part of the deal, the government would stop acquiring Bitcoin. It's unclear whether El Salvador is essentially abiding by the terms of the deal, though the International Monetary Fund reported back in July that the country's government had not purchased any Bitcoin since December 2024. El Salvador's Bitcoin office continues to announce crypto buys, including 1,090 Bitcoins worth about $100 million in November. So even though El Salvador is not supposed to be buying Bitcoin, they still are. And essentially, according to the International Monetary Fund, they're not. According to some data that's coming out of El Salvador, they are. So, according to the terms of the IMF El Salvador deal made public, the government would make public sector engagement of BTC-related economic activity confined. The private sector's acceptance of Bitcoin would be voluntary, and it would essentially wind down the involvements in the Chivo wallet. And essentially, Cointelegraph reached out to the International Monetary Fund for comment, and a spokesperson said negotiations for the sale of the Chivo were ongoing, and they essentially could not comment on about the details of this transaction. El Salvador recognized Bitcoin as a legal tender back in 2021 and began acquiring the cryptocurrency as a part of a strategy essentially largely pushed by the president of El Salvador. According to the data provided by the country's Bitcoin office, the government now holds around 7,509 Bitcoins, essentially, according to the recent data, worth about $659 million. Despite the reported deal between the International Monetary Fund and El Salvador, the president of El Salvador said in March that the government would continue its Bitcoin investment strategy, purchasing at least one Bitcoin daily. It's unclear how the president's statement could affect the International Monetary Fund agreement. So the IMF is still essentially trying to bribe, you could say, El Salvador to sell its Bitcoin. Not all of it, just the ones inside a Chivo wallet. Otherwise, they shouldn't be expecting any sort of other loans from the IMF to help their country, in other words. So, is that why a massive unknown whale has come out of nowhere and put a essentially bet a short position down on Bitcoin, Ethereum, and Solana? Ironically, no other cryptocurrency. Now, Van Eck is what we're going to talk about next, because it's not all doom and gloom and some people don't have the same perspective. Before we go through Van Eck's news, let's go inside the comment section first. This was happening there. And then we go straight into the next news on tonight's live. So let's see. Hi Miles saying XRP is a hit button. Some say XRP has a hit button. What's a hit button? A hit bottom. Obviously a hit button. As in, is reached its bottom? Is that what you're trying to say? Can you clarify? Good evening, Miles of CMF. Free and forever, good to see you. How you doing? Morning, Miles of CMF. Shelly, good to see you. How you doing? Do you think XRP can be $100 by 2026 middle? Anything's possible inside crypto space is what I would say. Consider variable change in other words. What's next then for crypto? If it's going to dip down more, then when is bull run? Well, we don't know if it's going to dip down anymore. There's always a possibility. Look, because we don't have regulations, manipulation is very easy to happen inside of the crypto market space. Inside of any market space, if it's not regulated correctly, then it's very easy to manipulate that market space. And a lot of people would make money in times like that, and a lot of people would lose money in times like that. And the crypto space is slightly like the Wild West still, even though the institutions see it as such a mature place, and they see stable coins as a mature place, and we have a Genius Act in place, and so many of the regulations in different jurisdictions around the world. We still don't have the correct regulations to monitor the crypto space for tax purposes, which is coming in 2026, or a Clarity Act, which essentially, defines what the SEC or the CFTC is going to be doing inside of this market space, or how they're going to be combining their work together. So there's a lot of things that still need to happen to get the market stage to that sort of level. So on the question of, what's next for crypto, is it going to dip more? Then when is the bull run? We're not that far off is the easiest way to put it, because 2026 is, the world is rapidly moving into the sector of from retail money to institutional money, high profile clients, which means regulations need to be there. If you want high profile clients and institutions inside of a market space, then it needs to be regulated. Otherwise, institutions and high profile clients don't really want to touch it. Some will, the majority won't. So if we're going towards that from retail money, then it needs to be regulated, which means 2026 is regulations, institutions, high profile money, and also utility, most importantly. Now, what's next? Greetings, Miles, as CMF. Lena, good to see you. How you doing? So that's what's next for crypto. Manny, good to see you. How you doing? It's gonna be like a domino effect of BTC. I feel sorry for us and Michael Saylor. Why do you feel sorry for us? I mean, we're not the ones holding Bitcoin, to be fairly honest. Mostly is Michael Saylor, but that doesn't mean that also Bitcoin's gonna go to zero in any sort of a way either. It's still gonna be around, but we just do really need to decouple from Bitcoin ASAP. Is the best way to put it. Don't understand why it's taking too long for the Clarity Act. You don't understand why it's taking long for the Clarity Act? Well, there's a lot of people that don't want the crypto market space to be regulated, believe it or not. And those people tend to be bankers. Bankers know that tech companies are slowly going to be replacing them. Hence why banks are slowly becoming tech companies in a way. I'll give you an example. Yesterday, I shared news that JP Morgan is thinking about introducing something similar to crypto trading on their own platforms. They're thinking about it. They haven't essentially went forward with the idea, and we don't know if they really have behind the scenes. But we know for a fact that JP Morgan has a new department called essentially called JP Morgan or JPM Payments, essentially, which is their blockchain essentially department. And also they've opened up a new office in central London, essentially in the city of London, and they're hiring students, blockchain students, anyone that understands blockchain, to work at JP Morgan right now. So banks know that tech companies are slowly becoming banks, in other words, and they're replacing them in this digital age world. So the people that sometimes don't want regulations to come for the crypto space are actually bankers. Bankers know that regulations are coming, but they're trying their best to slow it down as much as possible. The first regulation that passed for the crypto space was the Genius Act, and that angered banks. Banks were angry all over the country, essentially, pretty much in any jurisdiction, when the US came out with the Genius Act. And we saw that when the banks came forward and said, hang on a minute, okay, you've given them the regulations for stablecoins, but why are you also giving them another positive by giving yield on stablecoins? We can't offer that to our clients. And if you offer that through essentially stablecoins, and that means tech companies can take our clients, and then we can have $9 billion essentially exiting banks and going towards stablecoins instead. And that's bad for banks. So then they started looking into how they can remove that section essentially from the Genius Act so that you can't earn essentially yields in your stablecoins. The people that are sometimes against the crypto regulations are not just Democrats, but the Democrats are weaponized by someone or some department, and it's the banks. The same way the SEC was weaponized to go against essentially Ripple, it was the banks. The same way that the OCC essentially tried to pass regulations and essentially, approve a banking charter license for Ripple, Pax, or Circle, who came forward and said, no, let's just take our time? The banks. The banks are the one that know that they're being replaced slowly, and they're trying to stifle the crypto regulations as much as they can so that they can maybe catch up to the technology before the tech companies completely take over. So if you ever want to know who is really standing against the crypto space, it's the banks. And it's not all banks, but it is quite a bit of them. It's just the most powerful ones that are standing against it. And they're not standing against it because they hate crypto. They're standing against it because they can't beat crypto. Because crypto went from something that's laughable to something now that's serious. And when it was laughable, the banks didn't really care because they thought, well, who's going to replace us? Nobody. But then it went from laughable to serious, and that's when it became essentially the part of suing crypto companies to the ground, or essentially stifling regulations, still trying to keep it like the essentially Wild West, and so on. And the banks are the ones also essentially weaponizing Democrats to stifle crypto regulations as much as they can. They can hold it back, but at one point they have to let go, in other words. Or at one point the Republicans will get enough votes in to essentially be able to move forward. That's who's essentially initially holding crypto back. Banks love it when the crypto space stays at essentially the level of, the Wild West, because it's easier to manipulate it and make themselves look good, and for them to be able to catch up. Now, So regarding don't understand why it's taking long for the Clarity Act, that's why. Hi Miles and CMF family, let's go for facts news. Miles, I sent you a message. Have a look after your live show. Thanks in advance for your valuable answer. Cool, no problem. I'll check it after the live show. Miles, it's not looking good then until we decouple from BTC. We need to decouple. And for the last 2 years, I've been saying we need to decouple from Bitcoin. Also, the banks know that the moment we decouple from Bitcoin, it's pretty much doomsday for Bitcoin, and projects that actually have utility will, be taking the ranks. My message was sent to you on Telegram. I'll check it after the live show, no problem, Carl. Happy Pisces, good to see you. So how you doing? Do you think what is happening in Venezuela could affect the crypto markets? Yes and no. Sometimes the most oddest news inside the world, essentially could affect the crypto market space. Sometimes news that you think really couldn't impact the crypto market space, randomly it does. And again, it's just because we're heavily manipulated. What is your opinion about USA behavior, as I think Venezuela's population is suffering right now because of this robbery? I essentially stand with the US on going against not the Venezuelan people, but going against the Venezuelan government. I stand with the US. I stand with Trump on that matter. I don't stand with everything Trump does, but I do stand with that essentially regarding Venezuela. Because there are 3 things that I mentioned before that I think Trump should have moved harsher on, especially against Iran, essentially Iran. But it's another one side. Venezuela. I think that the people of Venezuela deserve, essentially human rights, the basics, I would have to say. And the Venezuelan government has been depriving that from them for the longest time. So I think the US, even though the US is obviously not doing it out of the goodness or the kindness of their heart, they're going to be taking oil and gas and whatever resources Venezuela has. At least the Venezuelan people won't be suffering as much as they did with their own current government. Good evening, Emails and CMF. Full XRP, good to see you. How you doing? Evening, Miles and family. Ian, good to see you. How you doing? They eat their piece of the pie, Miles, pretty much, and they want essentially the rest. JP Morgan is reallocated its finance department to Singapore to avoid legal action. It doesn't smell good for JP Morgan. I mean, they always get bailed out as well, but it's interesting that they moved it to Singapore, which is basically where Ripple's got its start from as well inside the crypto space. And the first country, if I'm not mistaken, that gave Ripple the green light was the Monetary Authority of Singapore. Now, Vanik. So as I said, it's not all doom and gloom, and some people do see it the other way around. Miles, would you agree that crypto is not a get-rich-quick scheme? It's a long-term hold. Yes and no. Good question. Very good question. Because a lot of people essentially see crypto as a get-rich-quick scheme, and a lot of people see it as a long-term. And the reason why I answered your question with yes and no, it depends what you do inside the crypto space. Example. If you want to go for the long-term play, then yes, I agree. Crypto is not a get-rich scheme, essentially fast get-rich scheme, and it can essentially be seen as the long-term play, the safe play, which is building on essentially, and through spot, essentially acquiring projects that essentially trying to build a foundation. So if you go for projects like XRP, XLM, XDC, HBAR, AVAX, and so on and so on, projects that are trying to build that foundation inside of crypto space, then yes, I agree, crypto is the long-term play. But if you're somebody that just wants to risk it all and be inside of essentially the meme coin section or the prediction market sector or so on, then it can also be a get-rich scheme, essentially a quick rich get scheme, so on and so on. So it can be both, I would have to say then. It's both, but obviously one carries 10 times the risk compared to the other one. If you want to be, the person is basically sitting at a roulette table. So one side of crypto is essentially, foundation, regulations, and essentially financial Web3 and so on and so on. And then one side of crypto is sitting at a roulette table. So it can be both. Preferably, you want to play the smart route, which is long-term hold and building that foundation, rather than sitting at the roulette table with the meme coins. Because you can lose a lot sitting at that table. Again, not financial advice whatsoever. So that's the best way to answer your question, yes and no. Then it is correct to say that we will see the real life changing maybe by 2030. 2030 is pretty much an end date for a lot of jurisdictions. So according to a lot of intelligent, essentially people, even regarding Elon Musk, for example, they see 30 as pretty much the end date. Like, in other words, the world will be very digital by 2030. But you've got to understand, it's not 2030 and then bam, the world is digital. It has to be a gradual movement towards 2030 and beyond. So it's not that 2030 comes around and then boom, crypto's up, boom, AI is all over the place. No, it has to be a gradual move. So in other words, 2025, we had some regulations built to build that foundation for the crypto space. 2025, we also had cases dropped essentially for the crypto space. 2025, we had institutions building essentially custody services for the crypto space. 2025, we had acquisitions made by crypto companies. 2025, we had so much essentially in terms of ETFs happening for the crypto space, not just inside the US, but on a worldwide basis. So it's not 2023 and then bam, the world's crypto, bam, the world's AI. No, it's gradual movement. And that's what happened in 2025. 2026, going to 2026, we're going to have now for the foundation to be built on essentially institutions. Regulations in 2026 are going to be happening. More ETFs are going to be happening in 2026. Institutions are going to be more involved inside the crypto space. Banks will have no choice but to be more involved inside the crypto space. And not just again in the US, but on a worldwide basis. So it's a gradual movement to that. And in that gradual movement, you will be seeing price action, especially during essentially, in terms of having a regulation for utility. If we have the regulation essentially for utility, and it was a Clarity Act and something even beyond that, then going into utilities, basically the price action we're going to be seeing in 2026 and 2027, 2028 and 29 and 30 and so on and so on. So it's not 2020, 30 and then world's digital, world is AI. It's more like step by step. That's what's been happening so far. It's all been step by step. So in other words, you would see that price action happening every year essentially going forward. We could have had more movements this year, but we still had quite a lot. We could have had more, but unfortunately one sector was slowing down the growth because crypto is rapidly growing and so is AI. The banks weren't able to essentially slow down AI, but they don't care about AI, to be fairly honest. The banks love the idea of AI. The banks want to use AI because they can lay off more employees and start using AI technology instead. So that works out positively for the banks because that won't replace them. But crypto will. Tech companies will essentially replace banks eventually. So that's why banks decided to slow down the crypto space a little bit because it was growing too fast. It might not look like that essentially in your eyes because you're looking at the crypto market space and seeing the crypto prices tumbling downwards. Essentially, you're thinking, well, nothing's really happening inside the crypto space, but too much has happened inside the crypto space. And that is why the banks sent 42 associations to the OCC to slow down crypto companies. Because if we weren't growing at a rapid pace inside the crypto space, believe me, the banks wouldn't even bother sending one association to the OCC, never mind 42 associations to the OCC to slow down essentially tech companies. So we have been growing at a rapid pace, but behind the scenes on a foundational level, which is what you don't get to see. But that's what we want. We want foundation inside the crypto space, not essentially price action. I couldn't care less, as I said previously before, if XRP essentially goes to $10, but then comes back to $5 or comes back to $4 or comes back to $2. Because that doesn't do it for me. I want essentially a foundation, a very strong foundation built on regulations and licensings that when a price, like a project like XRP climbs in price, it's able to stand at that price, not tumble back down again. So price action is not what we really want. What we really want is a strong foundation. You have a strong foundation, then essentially you have a strong structure, which means it's difficult to push you down. If you don't have a strong foundation, then essentially you become price action of sometimes you're here, sometimes you're there, sometimes you're here, sometimes you're there. And we don't really want that inside the crypto space. We don't want this. We really just want this, a little bit out, this, a little bit out, this, not essentially this. That's the last thing we want inside the crypto space. So that's a lot of things that you didn't get to see, but it's things that I always mention on this live. The regulations, the licensings, the ETFs that are happening on a worldwide basis, the tax laws that are coming in, BNY Mellon creating its own custody platform, JP Morgan thinking about creating a crypto trading platform. These are the foundations, essentially, or Ripple essentially acquiring a banking charter license. These are the strong foundations that are being built. That's what matters, a strong foundation, a strong structure, not price action. Price action is temporary, but if a strong foundation, it's no longer temporary. That's what we care about. So now, VanEck, as I said, it's not all doom and gloom. Some people don't see it the way essentially that massive whale that come out of nowhere and put a bet down see it. For example, VanEck says essentially that we have reached the bottom and that we're going to be going to a reversal. For example, the pressure is viable and Bitcoin mining, breaking even cost as well. Matt and Patrick Bush of VanEck note essentially that the electricity cost for 2022 era Bitmain essentially S19 XP miners has fallen 36% from essentially 0.12 cents per kilowatt an hour. Why does this essentially matter with Matt essentially, talking from VanEck about Bitcoin mining prices in terms of electricity? What's the relevance to Bitcoin's mining power in terms of electricity in kilowatts to Bitcoin's price point? Well, it highlights just how tough conditions have become for miners. As per Bitcoin News, the 4% decline in BTC hash rates marks the largest since April 2024. It was primarily caused by the recent shutdown of around 1.3 gigawatts of mining capacity in China. Mike essentially and Bush added that much of the essentially this power could be redirected to supporting also rising AI demands. A shift essentially they estimate could cut Bitcoin's hash rate by another 10%. Overall, these developments show that while some miners are facing tighter margins, the network is gradually adjusting to a changing energy landscape. Also, not all nations are stepping back from essentially Bitcoin mining. VanEck, essentially Matt and Patrick, estimate that up to 13 countries are actively supporting mining operations. Some of the prominent players are Russia, France, Bhutan, Iran, El Salvador, the UAE, Japan, and others that are actually maintaining the Bitcoin network. The latest Bitcoin news indicate that the hash rate declined by 4%. And essentially, analysts at VanEck suggest that this could be a positive signal for the cryptocurrency price in the coming months. So why is this positive? Bitcoin declining in terms of their hash rates. VanEck's crypto research lead Matt and senior investment analyst Patrick explained that the Bitcoin mining has historically acted as a bullish, essentially, indicator. A mid-December report, essentially by VanEck, highlighted that since 2014, Bitcoin has delivered a positive 90-day returns 65% of the time after the 30-day hash rate essentially declined. This Bitcoin news compares with the 54% chance of gains when the hash rate is increased. The trend remains consistent over a long horizon. Periods of a negative, essentially 90-day hash rate growth were followed by positive 180-day essential returns, 77% of the time with an average gain of 72%. This notably outpaces the 61% chance of positive returns observed when the hash rate rose over the same period. Historical data also shows that periods of essentially reduced mining activity have often given investors an advantage in predicting Bitcoin's next price moves. The recent Bitcoin essentially price gains are easing some pressure on miners, allowing a few struggling operations to start turning profit again. Currently trading at around 88,400 BTC USD, is still nearly down essentially 30% from its October 6 peak essentially of $126,000 and 80 essentially dollars. But the lower price are creating openings for miners to take advantage of the market. And in terms of that, a flurry of Bitcoin users worry that sustained drops in hash rates could strain the mining industry. This is because the more hash rates drop, the easier it is for miners to sell their holdings and hence create a downward pressure. VanEck's analysts, however, pointed to historical trends showing that periods of declining hash rate have often preceded strong returns for long-term holders. This suggests that the short-term weakness in mining activity can actually present opportunity for investors. So, according to one massive Bitcoin unknown whale who's just come out of nowhere and put a massive bet down, a short position down on Bitcoin, Ethereum, Solana, we're heading downwards, according to him. But according to VanEck and their head analysts, essentially, we're actually going to be doing a reversal. Now, this news that I'm going to read to you next should have seen as bullish, but it wasn't. In fact, it was very silent. So here it is. The US has decided to lower tariffs on Chinese semiconductors. Good news, correct? The US essentially decides to lower the tariffs on Chinese semiconductors to 0%, effective until 2027, following essentially a review initiated by originally essentially, Biden's administration, but going to Trump's administration. This decision aims to address alleged unfair trade practices by China, potentially influencing global semiconductors and essentially markets and technology sectors, but its impact on cryptocurrencies remains unconfirmed. When it was first announced that China essentially is going to be tariffed 100+% on terms of their semiconductors, the crypto market space just tumbled downwards, completely tumbled downwards. Tech stocks were shattered, and then Bitcoin followed tech stocks and just went further down. And that was the news of the US introducing 100% tariffs on essentially semiconductors for the Chinese market space. Now that we got some sort of updates of their thinking about 0% tariffs, it should be seen as a positive outcome. But the market's not reacting to it, which essentially shows that the market is heavily manipulated. That on some news, it just goes absolutely ballistic, downwards or upwards, and on some news that's supposed to count, it barely moves. The US Trade Representatives has announced a decision to set tariffs on Chinese semiconductors at 0% until 2027. This policy shift aims to modify the previous tariff approach under different administrations. Involved parties include the US Trade Representatives, the Chinese Ministry of Commerce, who opposed the tariff plans. The prior essentially 301 tariffs are being adjusted under essentially regarding semiconductors. This tariff reduction affects industry essentially reliant on semiconductors, potentially reducing costs for manufacturing. Markets might see a decrease in supply chain expenses, influencing price structures and competition dynamics. The reduction may also impact political and business relations. This move could ease tensions. In US and China trades. Again, this is all positive, but the market's not reacting to it. This change could influence future business strategies and industry standards. Financial analysts will watch these trends closely as businesses adapt to new conditions. Potential outcomes include increased investments in semiconductors. So in other words, tech stocks should be doing well for themselves going forward. But Bitcoin is not following tech stocks for some reason now. Historical trends suggest that changes could lead to technological advancements and competitive restructuring affecting industry leaders globally. As one analyst essentially put it, this tariff elimination could be a straight move to bolster the US tech sector amidst the growing global competition. So, when we first originally got the news that US going to be putting essentially a tariff of 100+% on China, the crypto market space tumbled badly because they followed. Essentially, Bitcoin followed tech stocks, and tech stocks went down, Bitcoin went down, altcoins went down. And that was on the news of China, 100% tariffs on semiconductors. Now that we have an update, China, US, semiconductors, 0% on terms of tariffs. Shouldn't that be positive? So why isn't the markets reacting to it? Because it's heavily manipulated. That's why. Because we don't have the regulations that we should have. And when you don't have regulations, it's a manipulated market space. Some people control the narrative. This is what, remember when I said a long time ago to everyone, on good news, the market will move bad sometimes. On bad news, it might move good sometimes. It just shows the level of manipulation. Because this is brilliant news. Because the opposite of that news was 100% tariffs on semiconductors for China. And everybody remembers Bitcoin collapsed pretty much up to a certain extent, and the altcoins followed in suit. But the opposite of that news now, 0% tariffs, the market's not reacting in a positive way. It really does show you who controls the market space. But again, essentially, this is because we don't have, having regulations, this wouldn't happen. It just wouldn't. Manipulation will still be there, but not to this extent. Someone is controlling the narrative, in other words. Now, something that I said a while ago is a conversation I had with one of my banker friends, which, as I said, I won't be naming which bank he works for or essentially what his name is or what department he holds. But the conversation that I had with my banker friend was regarding this AI bubble burst, if anybody remembers. I talked about this AI bubble burst scenario that Michael Saylor's putting a bet down, and I said, how do you see it? If anybody remembers, the conversation that we had that I shared with you was that he sees one clear winner from his perspective, from a banker's perspective, and essentially what he gets to see on a daily basis. From a banker's perspective, investment banker perspective, he saw it as essentially that there can only be one clear winner in AI because all AI does the same. Essentially, ChatGPT, Grok, Gemini, Copilot, they all do the exact same thing pretty much. It's just that who's going to get there first. And I said to him, the same narrative could be played in crypto. And the most longest thing that we know inside the crypto space is 99% of crypto will go away, 1% will survive. And these are the words of essentially Brad, CEO of Ripple, Cathie Woods, and the list goes on. So I said the same thing could be played in crypto because the majority of the crypto space does the exact same thing. So there can only be one clear winner. And he said, yeah, there could be. Which I asked him, who do you think is going to be clear winner? He said the one that has the most amount of licensing in place, the one that has the most amount of partnerships, licensing, and that the regulations play in its favor, which in clear choice is Ripple XRP. So on that basis that he told me from his banker perspective, investor banker perspective, that he sees Grok as the clear winner inside the AI space, and he told me that about a month ago. Well, here's some updates. The Pentagon has now just essentially partnered with Elon Musk and Grok. It seems that Grok was the clear winner. The Pentagon partners with Elon Musk's xAI to expand its AI capabilities, marking essentially a significant collaboration between military and technological innovations inside the United States. Having a military contract as big as partnering with the Pentagon clearly puts you here and everybody else that's in the same field as you here. The agreement essentially underscores the military's commitment to integrating advanced AI with potential implementations for technological approaches, but no direct crypto market impacts noted. The Pentagon has essentially initiated a long-term partnership with Elon Musk's AI startup xAI. This collaboration aims to expand AI capabilities within the US defense sector, assaulting a stronger foothold in technological advancements. Elon Musk, indicating his commitment, leads xAI after previously departing of essentially OpenAI and maintaining leadership roles at Tesla and SpaceX. This deal aligns with xAI with Pentagon interest in scaling AI tools for military use. The impact on the defense sector is significant as xAI expertise will support up to 3 million employees at impact level and 5 security. This collaboration is pivotal for integrating advanced AI models securely, as essentially xAI stated, through an ongoing long-term essentially partnership with the DOE and other essentially mission partners. xAI will be available essentially a family of government-optimized foundation models for classified operations and workloads. Previous awards to xAI suggest $200 million allocation, each to similar essentially entities, although current financial specifications remain undisclosed. The deal is positioned to bolster AI security and operational efficiencies without affecting cryptocurrencies. There is limited reaction from the crypto community or market influences, focusing primarily on AI benefits. The focus remains on AI integration rather than financial essentially markets and movements or cryptocurrency impacts. Insights suggest potential advancements in military AI applications, emphasizing AI deployments rather than financial or crypto-related consequences. So, one clear winner in every sector, and according to my banker friend, who, by the way, the only thing I can say is that he's at a certain level inside the banking sector that he's not allowed to trade any sort of investments. Due to the position he holds, he's not allowed to trade. He's not allowed to have a trading account due to the position he holds in the bank. Just to give you a perspective of what type of level he's in the banking sector, he's in the sector of he's not allowed to hold a trading position at all. He's not allowed to register any trading company. That's the type of level he's at. And the information he shared essentially with me over a few drinks was that one clear winner, Grok, essentially Elon Musk is a clear winner in AI, and in crypto there's only one clear winner either. There's only one clear winner as well, and it is Ripple XRP. Now, gold prices predicted to essentially reach $10,000 by 2029. So this is essentially what's going on right now. But before we talk about that, actually, let's just go straight to the next news. So, reported essentially a lackluster performance for the US stocks before Christmas, while gold and silver markets continue to soar, potentially reaching new highs. Gold's upward trend, driven by geopolitical risk and physical concerns, presents significant implications for long-term market strategies. Gold prices are expected to rise significantly by the end of the decade. According to essentially Yalden research, the forecast indicates that gold may hit $10,000 by 2029, with geopolitical tensions and economic uncertainties being primary drivers. Market analysts suggest that geopolitical concerns and economic stimulus policies are contributing to this price trajectory, leading to increased interest in gold as a safe haven asset. This expectation has sparked debate among investors and economists regarding future trends. Industry reactions have been essentially mixed, with some concerned about inflationary essential pressures, while others see the rise as evidence essentially of gold's enduring value. Economist experts like essentially Ed emphasize the importance of monitoring market signals during volatile times. Research notes potential financial implications of increased essentially interest and technological adaptations. Historical data suggests that while short-term essential market fluctuations may occur, long-term stability often essentially aligns with economic fundamentals. So, can gold really reach 10,000 by 2029? It's always a possibility, I would have to say. Interesting enough, gold is doing pretty damn well for itself. Digital gold is struggling. But according to Michael Saylor, digital gold is better. Now, the US GDP growth in quarter 3, 2025, strongest essentially growth in 2 years. The US has had the strongest growth from the last 2 years. The GDP essentially growth is up. So, the US Bureau of Economic Analysis reports a 4.3% GDP growth in quarter 3, 2024, because quarter 4 hasn't ended yet, driven by consumer spending, exports, and government expenditures, marking the strongest third quarter performance in 2 years. Some people might hate Trump and some people might like Trump, but you gotta give credit where credit is due, and America's actually seeing some growth. Despite impressive economic growths, no direct links or shifts related to major cryptocurrencies have been found on this news. However, the US Bureau of Economic Analysis reported that the country's GDP growth, essentially GDP, increased by 4.3% of third quarter 2025. The rate exceeds previous expectations and reflects significant consumer spending. The report was compiled by the BEA, overseen by the director, essentially Laurie, essentially D. Moore. It highlights substantial government spending and essentially export essentially increases, with imports showing decreases, which is what the US wanted. Trump wanted US-made products, not Chinese-made products. Again, nothing wrong with Chinese-made products whatsoever, but Trump just wanted more made in the US than made in China to be selling in the US, which is exactly what happened, hence why the US has had a growth, which isn't a bad thing. Essentially, it brings jobs back into the US. The immediate effect of the report indicates robust economic health, enhancing essentially investor confidence. This surge in GDP's report essentially supports broader economic predictions for the year, as evident in the GDP essentially data for the third quarter 2025, initial essentially estimates. While the report focuses on general economic metrics, it does not specify mentioning essentially cryptocurrencies and so on. Current predictions suggest a potential Q4 GDP growth of 3%. According to Atlanta Fed's GDP Now model, expected outcomes for the crypto market remains unlinked for the time being. Historically, consistent GDP growth like this can bolster national fiscal essential policies. While this report does not directly alter essential cryptocurrencies dynamics, past trends indicates market stability could favor economic activities. So, crypto markets haven't been impacted by this news, but it is news that everybody should know about. In other words, the US is actually seeing growth in their economy. Good growth. Growth that they haven't seen for the last 2 years. I wonder why the US didn't see this growth in the last 2 years. Maybe because the president was half asleep. Now, Arizona is what we're going to talk about next on tonight's live. So, Arizona has decided, the state of Arizona has essentially decided to go into crypto tax, but not in the way you'd think. So, Aimed increased calls for regulations of digital assets, Arizona lawmakers are essentially fast-tracking their approach towards reshaping the taxation and regulation of digital assets. A series essentially of bills have been proposed by state senate, for example, Wendy Rogers. The proposal included the exemption of virtual currencies from property taxes, the immunity essentially of blockchain node runners from local taxes, and the amendment of the state constitution to clarify the taxation status of virtual assets. Rogers' Act essentially arises in the light of the increasing nationwide discussion about the nature of virtual asset taxation and the competitiveness among states to essentially lure crypto investments. Honestly, we went from a space inside the crypto world where nobody wanted to touch the crypto space, and it was like a virus if you mentioned it to anyone, to now essentially American states are trying to make their states more essentially a comfortable place for tech innovators or blockchain innovators to come through and set up house there. Additionally, the essentially SB 10454 foresees on essentially blockchain node operators barring essentially countries, cities, and towns from imposing fees or fines essentially on those running blockchain nodes. The bill would prevent local governments from essentially signaling out node operators through taxes or penalties, Rogers said, highlighting the growing importance of decentralized infrastructure. Arizona already ranks among the few US states with crypto-specific legislations, and the state essentially allows the government to take custody of digital assets deemed abandoned after 3 years. A framework initially developed during attempts to establish a state-level Bitcoin reserve. Rogers previously co-sponsored a Bitcoin reserve bill, which essentially Governor Kate Hobbs vetoed in May. Following the veto, Rogers essentially vowed to rifle similar legislations and emphasizing essentially Arizona's ambition to become a hub for digital asset innovation. Loving the idea of American states fighting over who becomes the crypto hub. Besides Arizona, other states are also experimenting with digital asset policies. New Hampshire and Texas enacted laws around essentially state-held crypto reserves, while Ohio proposed exempting cryptocurrency transactions under $200 from capital gains taxes. In New York, a draft of 0.2% excessive tax on digital asset transactions remains essentially under committee review. Federally, Senator Cynthia Luminis introduced draft legislation proposing a de minimis essentially exemption for transactions under $300, though she will retire from the Senate in January 2027. So we have her for the time being. So that's essentially what's happening inside the crypto space, essentially, in terms of the US American states. They're fighting over which state becomes the crypto hub. Again, these are things that people don't get to see because majority of people, in the market space, they just see the price action, which is wrong to do. It's all about the foundation. And it looks like they're fighting to who becomes the foundation for the crypto space between these American states. Now, all of that is extremely positive. AI's next phase is reshaping markets and policies, is what we're going to go through next. AI technology is taking over essentially the financial sector, essentially institutional sector, every department you could pretty much say AI working and alive. And 2026, 2027 and beyond, we're going to see a lot of that incorporated. I mean, in 2026, we're going to have a robotics company selling robots to people that have put $100 deposits essentially this year for their $20,000 robots next year. That's going to be released to them. And in terms of what Elon Musk said, in about, essentially 10 years time or 5 years time, you could see pretty much for every 5 humans, there'll be 1 robot, essentially. So this is what's happening, and this is how far AI has come inside the government sector. And in some cases, AI news or AI announcements or AI contracts or AI licensing positively impacts AI crypto projects as well. Artificial intelligence has moved beyond being a pure technology story. It is now a defining force in global markets. You're about to find out how deep AI has integrated itself inside the financial sector, inside the governments as well. It is now a defining force in global markets, capital allocation, and economic policy debates. Recent developments show a clear transition is on the way. The focus is shifting from rapid expansions and headlining grabbing valuations towards efficiency, productivity, and macroeconomic consequences. For investors and policymakers alike, this new phase may prove more consequential than the initial boom. For sectors, it illustrates investor enthusiasm better than China's artificial intelligence listings. Domestic markets have seen dramatic, essentially, first-day performances from chip makers such as Meta X, integrated circuits, and more threads. These essentially shares surged several, essentially 100% on debut. These gains reflect strong local demand for exposure to strict technologies, particularly semiconductors and AI infrastructure. 2026 and 2027, we're going to see probably a lot of people lose their jobs even more to AI technology. For essentially, yet the rally also exposes a structural divide. Overseas retail investors are largely excluded from mainland China's IPOs, regulatory requirements making it difficult for foreigners to open offshore brokerage accounts, while alternative channels such as Hong Kong Stock Connect do not typically include newly listed essentially shares as well. For global investors, this creates a familiar tension. China domestic capital markets are essentially delivering some of the world's strongest AI-linked equity gains, but access essentially remains restricted. In other words, if you want to benefit from AI, bet on AI, is what they're trying to suggest. Going against AI is a losing battle. The same way going against crypto was a losing battle. While equity markets chase growth, central banks essentially are beginning to focus on AI's long-term economic effects. Officials at the Federal Reserve have signaled and that essentially rising labor productivity linked to artificial intelligence is being incorporated into their economic projections. The Federal Reserve is considering AI in their essentially economic projections going forward in 2026. That's massive. Because it went from, just like the crypto space, something quite speculative and in some cases not that accurate, to now something that's being considered in the Fed. Fed Chairman Jerome Powell has acknowledged the uncertainties. Past technological waves ultimately raised productivity and incomes, but the transition periods were often uneven. Research cited by policymakers suggests that in extreme long-run scenarios, AI could dramatically boost output while displacing a sizable share of essentially workers. In other words, a lot of people will be laid off. Even more moderate assumptions point to productivity growth well above historical norms. And if you wanted to yourself what happens to all of these people that will be laid off because of AI, they're most likely going to go into some sort of benefit systems that the government's going to be introducing, or they could just look for another job. And that other job will probably become a temporary job eventually as well, because that will most likely be replaced by AI as well. The end goal is essentially something that Elon Musk said, and some people laughed at. Elon Musk was on a podcast in Saudi Arabia, essentially not a podcast, but a live audience essentially show on essentially in Saudi Arabia, where they discussed the future of that we're all heading towards. And he was asked, where do you think the future is going? And Elon Musk said 10 to 20 years. He said, in fact, in 20 years or 10 years, he doesn't see anybody working anymore. Not that essentially there'll be, he doesn't see anybody working essentially, because everything will be replaced by AI. And the guy laughed and said, well, if nobody's working, how are you making money, and so on. And Elon Musk said, well, he didn't mention the second part, which is, he kept very silent, essentially, on the second part, which is, what happens? Where do people get their income? If nobody's working, if everything around is maintained by AI, then where's your income? Your income is going to be CBDCs from the government in most cases. Or it's going to be, people that will have still jobs as the ones maintaining, and engineers, in other words, maintaining the AI infrastructure. The rest that don't have any engineering degrees or understand anything about engineering or AI will be the ones on CBDCs. And if you were smart enough during this time, then you would have essentially built some sort of foundation on the crypto space. Because AI needs digital money also to survive as well, and hence why there's many reasons we're going into a digital world, for control, for other purposes, and so on. So in 10 to 20 years, even according to Elon Musk, there'll be no more jobs around. And you could tell that when essentially AI is now essentially, being implemented into the Fed. That's big news. AI and the Fed, the place that prints the US dollars that controls the world, AI is being connected to it. These expectations have implications also for interest rates. Higher essentially productivity can support stronger growth without also triggering inflation and potentially allowing a lower long-run policy rate. At the same time, labor market disruptions essentially complicates the Federal Reserve's dual mandate, managing essentially price stability alongside maximum employment by becoming more challenging if AI-driven efficiency reshapes entire sectors. The scale of investment flowing into AI infrastructure has drawn comparisons to early technological cycles. Data centers, advanced chips, and networking capacities are attracting vast amounts of capital. For some investors, the current surge we're in echoes the late 1990s build out of the internet infrastructure, which delivered a long-term benefits but also fueled excessive valuations. This parallel is shaping market sentiments. While few doubt AI essentially transformative potential, there is growing caution about near-term returns. Valuations essentially in parts of the AI ecosystem have risen sharply, and the payoff from massive capital expenditures may take years to materialize. As a result, investors are increasingly selective, essentially favoring companies with clear paths to profitability rather than pure scale. Which goes back to the conversation me and my banker friend had. There can only be one clear winner inside the AI sector. As the AI essentially boom matures, efficiency is emerging as essentially the new differentiator. Former Facebook essentially privacy chief officer Chris Kelly has argued that the industry can no longer rely on ever larger power-hungry data centers. Training and running advanced models requires enormous energy resources, placing strains on electricity grids and essentially driving up costs. This reality is pushing essentially AI leaders to rethink their strategies. Companies like OpenAI and Nevada are investing heavily into infrastructure, but there is increasing pressure to deliver more output with less compute. Breakthroughs in model architecture, software optimization, and energy efficiency essentially may prove just as valuable as essentially access to the latest hardware. The emergence of low-cost open-source models has reinforced this trend. They demonstrate that cutting-edge performance does not always require unlimited spending. In more efficiency-driven essential environments, competitive advantage may shift towards firms that can balance innovation with essentially displayed essentially resources in use. Taken together, these developments suggest that artificial intelligence is entering a more complex phase now. Explosive IPO gains highlights strong demand, but it also essentially undermines access barriers. Productivity gains are influencing monetary policy discussions, while infrastructure costs are essentially forcing a reassessment of growth strategies. For markets, this combination introduces both opportunity and risk. Investors may need to recalibrate their expectations. The next wave of AI returns is likely to be uneven, favoring companies and regions that combine technological capabilities with regulatory access and cost control. Policymakers, meanwhile, face the challenge of supporting innovation while managing labor displacements and financial stability. In other words, AI companies are expanding at a rapid, essentially, phase, and also they're investing in essentially infrastructure in terms of electricity and data centers. At the same time, governments are introducing regulations so that AI can grow. And also at the same time, governments understand that a lot of people are going to be losing their jobs and are going to try to look for other places that these people can work at. It's all temporarily because eventually AI will take over everything. AI's first chapter was defined by speed and scale. The next chapter will be shaped by efficiency and productivity and policy choices, which is exactly what, in a way, crypto is going to be for its next phase. The next phase of crypto is going to be regulations, governments and institutions, utility. That's the next phase of crypto, which is quite similar to AI for their next phase, which is essentially efficiency, productivity, in other words, utility, and policy choices, in other words, regulations. How successfully markets navigate this transition may determine whether the AI revolution delivers sustainable economic gains or simply another cycle of boom and correction. Now, this is why I said a long time ago that it's incredibly important for a lot of people to get involved inside the crypto space. There's many reasons to be inside the crypto space. But one of them is actually being AI. And it is something, again, I said 2 years ago on TikTok Lives, when I said, a lot of people's jobs will be replaced. So you want to be essentially in crypto before that happens. And if you're not, then you're going to be stuck on CBDCs. So This is why I said a long time ago, projects like XRP could actually save your life. And some people could laugh at that, some people could agree on that. Doesn't really make a difference to my life, but it would make a difference to your life if you're against projects like XRP, XLM, XDC, BH4, and so on. Again, none of this is financial advice. It's just free information. You want to take it, don't. Now, on the topic of XRP, which is the next news we're going to cover on tonight's live. But before we go through that, let's go to that comment section first. Let's see where we're at. And the people that did listen to me so far have done pretty damn well for themselves, I would have to say, I think. Now, just out of curiosity, so far, just a quick question to get everybody engaged inside the comment section. So far, for the past 2 years that you have been inside the CMF, are you happy that you joined the CMF? Did you learn more? Did you understand the markets more? Did you understand politics more or manipulation more? Or are you unhappy and you don't like the CMF? Just out of curiosity. CMF members, put inside the comment section, and I want everyone to participate in this. Put inside the comment section, in the last 2 years that you've been a part of the CMF, are you happy? Have you learned more? Do you have a better understanding? Or you don't like the CMF and it hasn't worked out for you? Just out of curiosity. And be genuine with it. I just want to know. In other words, did you make the right decision listening to me and joining the CMF, or the wrong one? Now, while everybody answers that question, let's go inside the comment section first. This is what's happening there before we go through the XRP and Ripple news. Miles, would you... Nope, we're here. Hello again, everyone. Good to see you. How you doing, Thompson? Let's go. I'm so glad to be here. DeFi is for us. Let's go XRP and other. Let's go, Thompson. Miles, what would you recommend to do then job-wise, even if you hold XRP? The jobs that will be most likely latest to be replaced, blue-collar jobs. Blue-collar jobs will be the last ones to be replaced. Family restaurants, family cafes, family-run businesses in that type of sector, and blue-collar jobs will always be the last ones to be replaced. Hello, Miles the CMF. I apologize for being late. Family matters. Let's go, Scott. Share the live. Happy holidays. Let's go, Scott. Let's go, Ray. Hi, Miles. Crypto Q. Good to see you. How you doing? Share the live. Let's go, Scott. Okay, now, so Miles will AI heavily influence crypto? Will AI heavily influence crypto? I would have to say yes. It definitely will in the long run. Okay, now the answers. Let's see. Was able to retire 2 years earlier. Yes. Let's go, Matt. Yes, I learned a lot from you. Let's go, Thompson. Stormy says yes. 100% happy with the CMF. Let's go, Stormy. CMF is great for me. Let's go, Thompson. Yes, I certainly did make the right decision. Let's go, Thompson. Miles, happy and love your dedication to educate us. Let's go, T. I have learned a lot from the group. Your friendship and brotherhood to me personally has been valuable. Let's go, Scott. I've definitely learned more regarding politics and monies. Let's go, Ray. I've learned so much that I've made money from listening to your advice. Let's go, Shelly. Yes, and yes. Let's go, Kamal. Happy, learns a lot. Definitely the right thing. Onwards and upwards. Many thanks, Miles. Facts. Let's go, Ian. Miles, I'm glad and grateful to have met you and be a part of the CMF, but I'm just fed up with the manipulation. It's fair enough. I'm in for over 3 years and definitely happy to be here. Let's go, Bull XRP. I'm glad to be here. Let's go, Manny. Let's go, Pablo. I've learned a lot from you and the group members. The relationship I've made have been invaluable. Let's go, Scott. Been following for a year. I think you are the best. I'm a little late to XRP and I'm about even, but excited for the future. Let's go, Crypto Q. I'm extremely happy with all the info you have provided since finding you, Miles. My family will thank me one day. I would never be able to see the future I have. Let's go, free and forever. Very happy that I found you. I stopped buying rubbish coins, and I know better now. Best choice ever. Let's go, Lena. Miles, you even called me when I was hospitalized. I was extremely surprised but happy to get your call. No problem, Scott. It's true, I did. Now, thank you everyone for the kind words, honestly. So, I'm happy to hear that in the 2 or 3 years that we've been together, that everybody is happy with everything that I've said so far. And nobody's had a bad time, which is good. Miles, although we've only known each other for less than a week, I think meeting you was the right choice. Thank you, Jane, for the comments as well. I am an OG and I'm not going anywhere. You and the CMF cannot get rid of me, even though I'm a Democrat. Centrist, no problem, score. Miles, you have been very generous and genuine, honest. I thank you. Funky, thank you so much for the kind words as well. We love you, Miles. Thank you so much, T, for the kind words. Well, it's generally good to hear that everyone's had a good time. We all are from the TikTok days. Facts. Now, lol, that's a great description. Now, the Ripple news, the XRP news. Thank you so much, honestly, everyone, for the kind words. And I'm so happy that everybody's learned something from me. It could be politics, crypto, anything else. And that's everybody's doing better since they started hearing from me, since they started learning from me. Let's go, Scott. Very happy about that. Now, and honestly, thank you so much for the kind words, everyone. I wholeheartedly agree. Let's go, Scott. Ripple news, XRP news. XRP crosses 4 billion transactions. Ripple CTO highlights utility over price because that's what matters. Foundation, it's the only thing that matters. David Schwartz, Ripple CTO, said that XRP's price does not reflect the token's real adoption, and that the most relative indicators lie in network activity, liquidity, and financial integration. Recently, XRP network surpassed 4 billion transactions processed since its launch. The network essentially settles transfers in seconds and keeps fees close to zero. The volume does not stem from isolated speculative spikes, but from steady flows of operation. Each transaction involves an effective moment of value, not internal transfers without economic impact. From infrastructure standpoints, essentially it represents an active network with sustained capacity to process payment at scale. Liquidity is another central pillar. XRP maintains consistent depth across multiple markets and corridors, allowing essentially large transfers to be executed without sharp slippage. Unlike tokens with essentially limited activity, its order books shows continuity. This characteristic is essential for institutions that require predictability when moving capital across jurisdictions. Institutional usage plays a key role. Several financial entities essentially use the network to issue assets, settle cross-border payments, and manage treasury flows. These are all for people that may assume that Ripple XRP does nothing. The operations are essentially executed directly on the blockchain without being locked or relying essentially on external layers. XRP's functions as a payment rail and a settlement tool, not merely as a unit of exchange in secondary markets. Ripple maintains that this pattern mirrors early stage observed in Bitcoin when the focus shifted from retail trading to infrastructure development. In XRP's case, adoption advances first through essentially corporate and financial channels, while retail usage remains in later phases. Financial products built on Ripple's token are already essentially operational and generate continuous activity on the network. The growth of XRP's transactions counter follows a stable trajectory, and the network essentially processes payments continuously with short confirmation times and low cost. The infrastructure is in active use and fulfills defined roles within the financial system. In other words, David Schwartz just came out and pretty much said the only thing he cares about is a strong foundation. Price action comes later. Strong foundation is now. On that note, that I'm so happy to hear that everybody that has been following me and listening to me has done so well for themselves and they're happy. Honestly, it makes me happy that everybody else is doing well inside of CMF. And honestly, thank you so much once again for all your kind words. We have come to the endings of this live show. So, just want to mention one thing. There's going to be no live show tomorrow, obviously. It's going to be essentially Christmas. So, Christmas Day, Christmas Eve, and sorry, not Christmas. One sec. So, there's going to be no live show tomorrow, the day after. Friday is Boxing Day. We might or we might not do a live show, but there's going to be no live show tomorrow and the day after because it's Christmas, in other words. In other words, everybody spend time with your family members. So I would either see you on Friday or I'll see you on Monday, but I will keep you updated. And Merry Christmas to everyone. This was episode 423 of the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. long time onwards for most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. I will see all of you most likely on Monday. And everybody, Merry Christmas as well. XRP is going to make me millionaires. Wow, watch and see. Please remember my name. Let's go, Scott. Let's go, Jane. Have a great Christmas. And thanks again for all your help. Good night, T. Let's go. Merry Christmas. Let's go, Thompson. Thank you, Miles. Oh, man. Either way, take care and stay safe. Also, the same with everyone else. Let's go, Thompson. Merry Christmas, Miles and CMF. Let's go, Mickey. Thank you, mate. Let's go, Tony. Happy holidays, everyone. Let's go, Stormy. Good night, Miles and family. Great life. Many thanks and have a great Christmas. See you on Friday or Monday. Let's go, Ian. Definitely Merry Christmas to all. Take care, Miles and CMF. Let's go, Thompson. Let's go, Ray. Good night, Miles and CMF family. Season's greetings to everyone. Let's go. To all of my CMF members, enjoy your holidays and your family. I love and respect all of you. Let's go, Scott. I will see everybody most likely on Monday, but we never know. It could be Friday as well. But no live show tomorrow day after because it is Christmas. Merry Christmas to everyone, CMF members. Like, comment, subscribe, follow if you already haven't. If you have, thank you so much. I will see all of you Friday or Monday. CMF, have a great Christmas. Merry Christmas, everyone. Let's go, Jay. Thank you, Miles and CMF. Merry Christmas. Let's go, Mike. I messaged you. I'll check it after the live show. Merry Christmas, everyone. Good night. Bull XLP, let's go. Scott, let's go. Krypton, let's go. Mike, let's go. Jane, let's go. Thanks, Miles. Merry Christmas to all. Enjoy your break, Miles. Let's go, Shelly. Thank you, Miles, for all you have done for us. Enjoy your Christmas and all the best. Let's go, Lena. See you, everybody. Merry Christmas. Friday or Monday. Like, comment, subscribe, follow if you already haven't. If you have, thank you so much. Thank you much for all you've done for us. Enjoy your Christmas. Night, Miles and CMF. Have a good Christmas. Merry Christmas, fam. See you on Monday or Friday. Merry Christmas, everyone.